Tired of waiting just to see a dividend payout? What if I told you there's a way to get paid every single week without trading, without high risk, and without complicated strategies? Imagine this. You invest your money, and instead of waiting months for a payout, you get paid every single week. Sounds great, right? Well, it's possible. And today, I'll show you exactly how. Most dividend stocks pay every 3 months, which means long gaps between payouts. But with the right strategy, you can build a weekly cash flow system, a portfolio designed to send money your way every 7 days. Why does this matter? Because bills don't wait 3 months. Expenses come up every week. Wouldn't it be nice if your investments could cover them consistently? This strategy isn't complicated. It's all about choosing the right mix of dividend stocks, stocks that pay at different times throughout the year. By the end of this video, you'll have a 10-stock blueprint to create your own weekly cash flow machine. Chapter 1. How the weekly dividend strategy works. Alright, so how does this work? How do we actually get dividends every single week? Most dividend stocks pay quarterly. That means once every 3 months. But here's the trick. Different companies pay out at different times. By carefully selecting 10 dividend stocks with staggered payout schedules, we can create a steady, weekly income stream. Think of it like a relay race. One company pays in week 1, another in week 2, and so on. By the time the cycle is complete, it starts all over again, keeping the cash flow running week after week. But not all dividend stocks are worth buying. We need to focus on 3 key factors. Strong dividend history, companies that consistently pay and grow their dividends. Staggered payout dates, so we get paid every week, not just once a quarter. Financial stability, because high yields mean nothing if the company's struggling. Setting this up isn't complicated. You just need the right stocks. And that's exactly what we're about to cover next. 10 of the best dividend stocks for weekly cash flow. Chapter 2. The 10 best dividend stocks for weekly cash flow. Each of these stocks has been carefully chosen based on their dividend history, financial strength, and payout schedule. We'll go through them one by one. I'll tell you why they're great, when they pay, and what to watch out for. Let's start with stock number 1. Stock 1. Cisco Systems, or CSCO, Tech Sector. First up, we have Cisco Systems, ticker CSCO. This is a tech giant known for networking and cloud security. It's been paying dividends for over a decade and has a solid history of steady payouts. Its yield hangs around 2.6%. Payout schedule? January, April, July, and October. Perfect for filling in those first week gaps. Why Cisco? It's stable, profitable, and positioned for long-term growth. With the rise of AI and cloud computing, Cisco's future looks bright. Now, let's move to stock number 2. Stock 2. Pennant Park Investment, or PNNT, Business Development Corporation. Next, we have Pennant Park Investment, ticker PNNT. This one's a Business Development Corporation, or BDC, which means it lends money to mid-sized businesses and collects interest. A massive 13.8% yield. Payout schedule? Monthly, which means extra cash flow on top of the weekly payouts. BDCs like this one carry more risk, but they also pay higher dividends. As long as the economy stays stable, this stock is a great income generator. Alright, moving on to number 3. Stock 3, EOG Resources, or EOG, Energy Sector. Energy sectors are great for dividends, and EOG Resources, EOG, is no exception. EOG is a leading natural gas producer, and with increasing demand for LNG exports, it's in a strong position. Yield? 3%. Payout schedule: January, April, July, and October. Great for adding stability to our cash flow. The best part? EOG has been growing its dividends consistently. If energy prices rise, so will the stock and your payouts. On to the next one. Stock 4. Enterprise Product Partners, or EPD, Midstream Energy. Now, let's talk about pipelines. Enterprise Product Partners, or EPD. This is a midstream energy company, meaning it transports and stores oil and gas. Less risky than oil drillers, but still high yield. Its yield? 6.4%. Payout schedule? Last week of each month. Perfect for end-of-month income. EPD has been raising dividends for 25 years. Even when oil prices drop, this company stays strong and profitable. Next up, a dividend ETF you love. Stock 5. JP Morgan Nasdaq Equity Premium ETF, or JEPQ, High Yield ETF. This one's for ETF lovers. JEPQ, a JP Morgan dividend ETF. Instead of investing in individual stocks, this fund uses covered call strategies to generate high cash flow. It has a 9.7% yield and a monthly payout schedule, so it adds another steady cash flow stream. It's a lower risk to get exposure to dividend stocks while still enjoying solid returns. A great set and forget option. We're halfway there. Let's keep going. Stock 6. Black Hills Corporation, or BKH, Utility Sector. Utility stocks are some of the most reliable dividend payers, and Black Hills Corporation, BKH, is one of the best. It's a regulated utility company serving 1.3 million customers. And the best part? Consistent revenue, even in downturns. It offers a 3% yield. It pays out in the months of February, May, August, and November. With the AI boom increasing energy demand, utility stocks like this could see strong growth. On to stock number 7. Stock 7, Target, TGT, Retail Sector. Retailers might not seem exciting, but Target TGT is a strong dividend payer. While its stock price has struggled, its dividend keeps growing, averaging 11% annual growth. It also has a 3% yield. The payout schedule? January, April, July, and October. Target's focusing on e-commerce and beauty products, two fast-growing segments. Plus, it's cheaper than Walmart right now, which could mean upside potential. Next up, a unique income play. Stock 8. Simplify Volatility Premium ETF, or SVOL, Option Strategy ETF. This one's different. SVOL, an ETF that profits from market volatility. Instead of investing in stocks, SVOL shorts volatility futures, meaning it makes money when the market is stable. Its yield? A huge 16.7%. Payout schedule? Monthly, adding more frequent income. It's a smart hedge against market chaos and pays well. But like all high-yield funds, it's not risk-free. Next, a strong banking stock. Stock 9. Regions Financial, or RF, Banking Sector. Banks make great dividend investments, and Regions Financial RF is a solid pick. With low commercial real estate exposure, it avoided the big banking crisis. Plus, interest rates could boost profits. It offers a 4.1% yield. It pays out in January, April, July, and October. Stable, growing, and positioned for long-term success. Last but not least, an REIT. Stock 10. WP Carey, WPC, Real Estate Investment Trust, or REIT. If you want real estate cash flow, check out WP Carey, or WPC. This REIT owns 1,300 plus properties across industrial, warehouse, and retail spaces. With a 6.5% yield, this strong stands out. And it also pays out monthly, giving consistent income. With a 98% occupancy rate, this REIT is a stable income generator. And as interest rates fall, its stock could rise. And that wraps up the 10 dividend stocks. Now, let's talk about how to put this strategy into action. Chapter 3: How to implement the weekly dividend portfolio. Alright, now that we have our 10 dividend stocks, let's talk about how to actually set this up. The first step: decide how much you want to earn. Do you want an extra $50, $100, or even $200 a week? Your investment amount depends on your goal. Here's a simple formula: desired weekly income divided by portfolio yield times 52 weeks. For example, if you want $50 per week and our portfolio has an average 7% yield, you'd need to invest around $37,000. If you aim for $100 per week, that's about $74,000. But don't worry, you don't have to start big. Even a smaller portfolio will still generate consistent income. Next, make sure to buy before the ex-dividend date. This is the cutoff to qualify for the next dividend payout. Check Yahoo Finance or your broker to confirm dates. Lastly, reinvest or withdraw. If you reinvest, your dividends will compound, growing over time. If you withdraw, you'll enjoy weekly cash flow right away. It's that simple. Choose your goal, buy at the right time, and start getting paid weekly. Chapter 4: Long-term benefits of weekly dividend investing. So why does this strategy matter in the long run? Well, dividend investing isn't just about getting paid weekly. It's also about growing your wealth over time. First, let's talk about compounding. If you reinvest your dividends, your income will keep increasing. Over time, your portfolio grows, and so does your cash flow. Second, dividends help fight inflation. Prices go up, but so do dividends from strong companies. That means your income can keep pace with rising costs. Third, dividend stocks are more stable. Unlike growth stocks, they provide consistent income, even in market downturns. That makes them a great hedge against volatility. And finally, the biggest benefit? Financial freedom. Imagine having enough weekly cash flow to cover your expenses. No stress, no waiting. Just steady income rolling in every week. So, there you have it. 10 dividend stocks that can pay you every single week. We covered how this strategy works, the best stocks to buy, and how to set it up for steady cash flow. Now, it's your turn. If you found this helpful, hit the like button. It really helps. And let me know in the comments, which dividend stock is your favorite? Also, don't forget to subscribe for more smart investing strategies. Want to see my list of top AI ETFs? Click the video on the screen now. Thanks for watching, and I'll see you in the next one.